Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good to talk with you. Thanks for coming on.
Happy to be here.
Well, stocks in New York ended higher last Friday, in part because of hopes for a vaccine. Here in Korea, the KOSPI was strongly higher today, too. What's the story in the markets today?
Okay, well, as you mentioned, in the United States, all three major stock markets rose on Friday. But if you look at it for the entire week, S&P, Nasdaq has risen for the entire week, though S&P, the rise was a bit bumpy. But Dow, the rise was bumpy and fell for the week, even though it rose on Friday. So United States is having a bit of a unstable growth, if you will, and no one is quite sure why the U.S. stock markets are actually doing that well. If you look at what is actually going on in the real economy, the coronavirus infection is hitting record highs in the United States. U.S.-China relationship is getting worse. And there are some signs that what's a slight recovery we saw in April, May, and early June is running out of steam in late June and July. So there has been a lot of speculation on why the stock market is doing well, why it seems to be decoupling from the real economy. Some people are speculating that perhaps it is on the hopes of second fiscal stimulus measures, which are coming up in Congress in July. Now, the European markets, similar to the United States, it was up on Friday, but if you look at the entire week, it was down quite substantially. On the other hand, the Asian market, if you look at the week, last week as a whole, it was mixed. But today, all major Asian markets seem to have gone up on expectations of recovery in China. Nikkei, after loss last week, it rose today, and it almost made up for the loss of the last week. Shanghai, it was down on 10th of July, then they went on a holiday, and it was up today, and it made up most of the loss that was caused on July 10th. Hong Kong, again, it went down on July 10th, then they went on a holiday. It went up slightly today, but not enough for a full recovery. But there are also concerns that perhaps Chinese markets are also in a bit of a bubble themselves because, well, second quarter for China is expected to be a disaster. KOSPI and KOSDAQ, it did very well today. KOSPI rose by 1.7% after dropping last week. KOSDAQ rose 1.1% today, and unlike KOSPI, it's continually rising since the beginning of July. The strong Korean market today is due supposedly on hopes of recovery. Interesting thing, KOSPI today, individuals sold, institutions and foreigners bought stocks, but KOSDAQ was the other way around. Individuals bought stock, but institutions and foreigners sold.
Well, Professor, we just heard a minute ago about what seems to be a recovery in exports to some degree. What's going on in exports, and what's your outlook?
Okay, well, as mentioned in that report, the export for the first 10 days in July compared to first 10 days in July last year fell by 1.7%. If you look at the daily numbers, because these are only 10 days, whatever days off that you may have really eats up into these figures. But if you look at the daily figures, it went down 1.7% as well. So it does seem like, at least for the first 10 days, the decline in exports were not as big as where it was in June. But again, as it was pointed out in that report, a lot of it is because Korea was extraordinarily lucky in getting some good shipbuilding orders in the first 10 days of this year. So shipbuilding went up by 307% compared to the 10 days of July last year. And semiconductors did well, as it was in the first half of the year. What may be a bit surprising is that automobiles are doing well. It went up by 7%, even though the auto parts went down by minus 34%. But if the automobile export figures continue to rise or at least stop falling, then they may signal at least a limited recovery for Korean exports. Imports if you look at first 10 days of June, it went down compared to the first 10 days of June last year. But this time, imports went down 9.1%. So while the reduction of decrease in exports was good news, the increase in reduction or larger reduction that we saw in imports may mean that Korea is headed for a domestic recession, but we'll have to see. The trade was in a deficit again, minus $835 million, but these are the first 10 days, so it's very preliminary. Last time, as you saw in May and June, the deficits turned out to become surpluses, so the first 10 days of the month, the figures should not be representative of the entire month. We should wait until we see the figures for the first 20 days of the month in the next couple of weeks.
All right, Professor, it's Monday. Give us a preview, a couple of things that are coming up this week.
Okay, well, there's the monetary policy meeting by the Bank of Korea. On Friday, we'll have to see where the interest rate goes. Most people expect the interest rate to be frozen. The June employment report is coming out on Wednesday, so we'll have to see what happens to the full-time worker data, manufacturing employment data, whether the coronavirus is eating into Korea's exports and jobs in the manufacturing sector. Also, what is happening with full-time jobs is especially important because that is not very much affected by government-created part-time jobs. So the job numbers should be very interesting here. And then for foreign statistics, the Bank of Japan is publishing their economic outlook this week. U.S. they're publishing their monthly oil reserves, which should give some indications on how the oil prices may change. And this is probably the most important, the U.S. retail sales, the consumption. As I mentioned, there are some fears that the U.S. recovery is dying down. And if it is, then it should show itself in the retail sales numbers.
All right, Professor Young, always good to have you on. Thanks so much for your insights.
Thank you.